It's a small town in the wilderness of Wyoming that's best known for fly fishing. But once a year, Jackson Hole becomes very important. That's because central bankers from many of the world's leading economies gather there for the annual Monetary Policy Symposium. US Federal Reserve Chairwoman Janet Yellen is attending the event, which could give clues about the future direction of interest rates and economic growth in the world's biggest economy. Well, let's go to Craig Copetas now. He joins us from New Orleans. Craig, you've been to Jackson Hole, you've been to many events. What is this meeting like? What makes it different?
Well, as you said, it's the fly fishing. The event was stationed there because former Fed Chairman Paul Volcker liked to go fly fishing. So they figured if they had it there on the banks of the perhaps aptly named Snake River, more people would come. And indeed, they do from around the world.
I bet Janet Yellen isn't fond of fly fishing. It's just a guess. But anyway, what's on the agenda? What's on the agenda this year?
Interest rates, interest rates, interest rates, and more interest rates. This is what it's about. Can the global economy sustain a rise in interest rates? And the general feeling is that the global economy is just not strong enough to absorb higher interest rates. So this is what the big argument's going to be about in Jackson Hole.
But this is the problem, isn't it, Craig? I mean, really, central bankers have just a few options, a few tools in their bag, so to speak. They've used interest rates, they've used quantitative easing. They still say that the governments around the world should be backing off the austerity policies.
Well, you know, confusion is a word we have invented for an order which is not understood, and nowhere is that more apparent than in Jackson Hole. You have to remember something here, Matthew. The Fed and the global central bankers, they missed the housing bubble. They missed the interest rate problems. The data that they use has turned out over the past 10 years, and this isn't me speaking, this is many economists, has turned out to be essentially felonious. So they've got a lot of things wrong. And you have the United States Congress and European governments complaining that this has to change. And you also have the public complaining that all of this has to change. But the fact remains, as far as the U.S. Fed goes, it was the United States Congress that enacted laws that make the Fed follow certain rules and regulations that today the United States Congress and the people just don't like.
All right, Craig, you can go back and enjoy the jazz now. Thank you very much for joining us from New Orleans.